Hello and welcome to the program. Let us start with a quick look at how things finished on Wall Street overnight. The three major indices closed essentially flat. The Nasdaq ended at 26067, the S&P 500 settled at 7641, and the Dow finished at 52759. Very little movement there. But here is what really matters. The pre-market futures are pointing clearly higher. Nasdaq futures are up 44 basis points, S&P futures are up 38, and Dow futures are up 56. That tells us markets are likely to open on a positive note today, and global risk appetite is showing signs of a comeback. On the stock level, Nvidia slipped a tiny bit to 216.85, and Tesla was down about 0.33% to 345. But here is an interesting divergence. MicroStrategy actually pulled back 1.3% to 112.39, even though Bitcoin had a big rally. That kind of stock versus coin divergence is worth watching because it often signals some catch-up move later, either higher or lower. Also, a quick note on some names that had big gains recently, like Mara, Lime, TEM and ALM. Their moves are impressive on paper, but we could not verify those numbers with reliable sources, so by our discipline we are not treating them as the main theme today. Let us now look at the broader macro picture. The 10-year Treasury yield is at 4.70%, unchanged from yesterday, but still elevated compared to a week ago. That is a persistent drag on equity valuations. The liquidity environment is tight, not loose. However, the VIX dropped sharply, down 3.75% to 15.41. That is near the lower end of the normal range, and it suggests fear is fading. The dollar index is at 98.75, basically flat but sitting in a weak zone between 98 and 99. A soft dollar is generally supportive for emerging market assets and commodities. Oil remains firm, with WTI at $86.79 a barrel and Brent at 93.82. That supports the energy sector. And spot gold rose about 1% to $4,639 an ounce. The fact that gold is strengthening even with Treasury yields this high tells us both safe haven demand and inflation hedging demand are rising together. So what is the big picture? We have four signals lining up. The VIX is falling, the dollar is weak, US stock futures are strong, and Bitcoin jumped 7%. Taken together, we can define this as a conditional risk on environment. Risk appetite is improving, but there is a ceiling, and that ceiling is the 4.7% Treasury yield. If Nasdaq futures turn lower before the open, or if the 10-year yield breaks above 4.75%, then this whole thesis falls apart. Now let us turn to China. The onshore yuan is at 6.7094 against the dollar, and the offshore rate is at 6.72. The yuan has strengthened recently and is sitting at a relatively strong level. Combined with the weak dollar, the currency conditions are favorable for foreign capital flowing into a shares. A stronger yuan lowers hedging costs for overseas investors, which supports the core assets and growth names that northbound money tends to favor. On trade and tariff news, there are no verified new developments. For today's A-share open, we expect a higher start with a high probability. The basis is the triple confirmation of higher US futures, a lower VIX, and a stronger yuan. But if Nasdaq futures turn negative before the open, or if the offshore yuan weakens back above 6.73, then we could see a flat or even lower open instead. For the A-share market today, our call is a range-bound bias to the upside. The Shanghai Composite closed yesterday at 3905, holding above the 3,900 level for consecutive sessions. With improving external sentiment, we could see an attempt at the 3950 to 3960 zone. The Chi-Next index already jumped 1.43% yesterday to 3545, and the textile may have some follow-through momentum. But we need to watch the failure conditions. If the CSI 300 breaks below 4590, or if northbound capital sees a net outflow exceeding 30 billion yuan in the first 30 minutes, then the bullish bias is invalidated and we shift to caution. Now let us talk about sectors. The first main line is AI computing hardware and the optical module supply chain. From indium phosphide substrates to silicon photonics integration to high-speed lasers, multiple segments are showing relative resilience. Internal capital rotation in the sector is still intact. With U.S. tech futures moving higher and risk appetite improving, this direction has the highest probability of being active today. The second main line is power equipment and data center power supply. Data center transformers and power infrastructure are being pulled by AI computing expansion, and this is the most persistent industrial logic right now. Our system scan also gives a continue holding signal. Both of these lines do not depend on unverified stock moves, so the certainty level is higher. Now the risk side. First, avoid high flyers that have already completed their catch-up moves. For example, AEHR is up nearly 20% on the month, and AXTI is up over 38%. Our system has flagged both for profit taking. The pileup of short-term gains could easily trigger a pullback. Second, strictly avoid the unverified momentum names like Mara, Lime and TEM. Their gains have no reliable source confirmation, and if they are proven false, the sentiment reversal risk is extremely high. On northbound capital, with a weaker dollar, a stronger yuan, and firm U.S. futures, the probability of net inflows today is higher than outflows. Watch the offshore yuan. If it holds below 6.72 and strengthens towards 6.70 or beyond, foreign inflows could pick up momentum. But if it quickly weakens back above 6.73, then northbound flows could turn negative. On individual stocks, ALM, the tungsten miner, is showing a range-bound to stronger bias with a 55% probability over the next 1 to 3 trading days. Tungsten is a key material for semiconductors and defense, and supply tightness expectations are building. But the discipline is to observe and not chase. POET, in silicon photonics, is relatively resilient with a 58% probability over the next 1 to 5 days. The catch-up progress is only at 30.9%, meaning the main rally is not done. Hold the position, do not add, do not reduce. AXTI, however, should be exited. The system flags that its catch-up progress has reached 100%, with a monthly gain of 38% and a PEG valuation over 12. Geopolitical risk is also prominent. If the price breaks recent support on volume, the correction pressure will release quickly. Take profits and do not add new positions. Let me wrap up with the core judgment for today. The dollar is weak, the VIX is low, and the yuan is strong. The window for risk appetite recovery is open. AI computing and power equipment are the main lines. But the 4.7% Treasury yield is capping the upside. Our probability assessment for today is 35% up, 45% sideways, and 20% down. That is all for this session. Thank you for watching, and we will see you next time.